Yo, what's up, everybody? It's Tuesday, August 6th. So we had a little bit of rebound in the market today after yesterday's sell-off, and that's totally understandable. I sent that out. I maybe even mentioned that yesterday. I don't know, but I sent that out to my subscribers. I said, expect that. If you're a trader, short term, you could play that bounce. But here's the thing I want to talk about today. Now, a lot of you gave me props for my call on this market. I'm not calling it a correction, okay? And I'm going to get into that. But on this market decline, a lot of you gave me props saying, hey, Mike, great call. And I appreciate that immensely. By the way, please click the like and subscribe. It helps the channel a lot. You guys have been doing it. I really appreciate it. If you've already done it, you don't have to do it again. But if you're new here, please click the like and subscribe. So I'm not going to take credit for that. I appreciate the props, but anyone could have made that call because, the market it got ahead of itself. We saw the economic slowdown. And even though I've been saying it, and I kept saying that the market will follow what's going on in the economy, anyone could have made that call. So I'm not going to take credit, but I want you to hold me accountable now. Okay? Now is very important because I'm saying something very different than what is out there right now. So I want you to hold me accountable from this point forward, where I am saying this is, and I said this yesterday, this is not going to be a V-shaped, market pullback. And I'm going on record again now, and I'm going to repeat, I want you to hold me accountable now. We're going to go back, like I always say, we're going to revisit this stuff, at some point down the road, because I'm telling you now, and this ties in with what my outlook has been for several months now. We are entering into a period where we are seeing or going to see a fundamental change in conditions, in monetary conditions. And the reason why this market decline, in my opinion, is not just your garden variety correction that's going to go back up, which is it's the prevailing view right now. I mean, if you look at anything online, it's like buy the dip, no recession is coming, I've been saying, and I'm saying right now, that the reason why this is different is precisely because we're going to see rate cuts by the Federal Reserve. And as I have been explaining to you guys, and many of you already understand this, it doesn't need any further explanation from me because you get it. It's the exact dynamic, only in the opposite sense, of why the market went up so high and why the economy stayed strong, despite the fact that the Fed did something like 13 rate increases and raised the rate to the highest level in like 40 years or something like that. And I said, even prior to the beginning of those rate hikes, I said that was going to turn out to be very bullish because the amount of fiscal transfer associated with those rate hikes, interest income transfers from the government into the economy and from the Fed to the banking system was going to be enormous. Okay, right now, this year so far, this fiscal year, which we still have like 2 months left to go, $650 billion has been transferred into the economy. And the economy is slowing down. So you see, it's taken more and more fiscal to sustain a level of economic growth that is kind of mediocre. I mean, what did we have? 2.8%, and we're going to have a deficit of like 1.4 trillion. I mean, we used to get 2.8% GDP growth when the deficit was 250 billion, like 15 years ago. So it's taken, if you understand, it's taken more and more energy to keep the economy sustained at a very moderate growth pace. And as soon as the Fed starts cutting interest rates, see, this is what nobody understands, and this is what I'm explaining to you guys. that these interest rate cuts, which the institutional thinking and the pervasive thinking on this by everybody except yours truly, who understands it, and maybe some of the MMT, academics, although they're not out there talking about it, about the market. I mean, they might be talking about their, theoretical MMT, whatever. I'm telling you, like I say, I'm the only guy who has an applied approach to MMT. These rate cuts are going to siphon off those leading fiscal transfers into the economy, which will eventually reduce net transfers. It's very important. Remember, I've been talking about net transfers. That's leading transfers minus taxes. That's been going down compared to last year. It's now down like 268 billion compared to last year. I mean, that's not insignificant. And I said that is going to be the factor that leads to weaker economic growth. And once again, stocks follow the economy. So I want you to hold me accountable from this point forward. We're going to come back and revisit this, where I'm saying, number one, this is not your garden variety correction where it goes down and then it's going to go back up again. And, investors have become very conditioned to that over the last few years. All right. Since the COVID crash, they've become very conditioned to that, the Fed comes in, it cuts interest rates, maybe it does QE again, this kind of crap. Yeah, sorry, my video got interrupted because I had an alarm that went off. But what I'm saying is this is not going to be your garden variety correction. This is going to endure. We are going to see progressively slower economic growth. I'm telling you now that if the Fed cuts according to what the market is forecasting right now, which is like 125 basis points by December, we're going to go into next year, 2025, and there's a lot of unknowns in 2025. Who's going to be the president? What the economic fiscal policies are going to be? Will those Trump tax cuts expire? Stuff like that, all right? We're going to go into next year, even not knowing what next year brings in terms of the political landscape. We're going to go into next year, that 125 basis point cut is going to reduce growth, GDP growth, very close to zero, if not zero. And when the Fed sees, and by the way, what's that mean? It's going to mean unemployment is going to go up. Okay, jobless rate is going to go up. And when the Fed sees that, what do you think it's going to do? It's going to do what its institutional mentality tells these guys to do, which is cut some more, which is going to reduce further these interest income transfers, which means they're going to cut some more. So it's like a self-sustaining cycle, and we're going to go into negative growth. And again, you don't have anybody out there right now. They're all saying, these are all the same people universally who predicted that 2023, hands down, 100%, put all your money on it, there's going to be a recession. I was the only one saying there's not going to be, I said as long as they raise the debt ceiling in 2023, which they did, there's not going to be a recession. And as soon as they raised the debt ceiling, I said, we're in the clear, we're going to make new all-time highs and blah, blah, blah. So you got to hold me accountable starting from now, okay? This is very important. I appreciate the props that everybody gave me yesterday. I'm not claiming those, all right? Anyone could have made that call. I'm saying hold me accountable right now, because what I'm telling you, what's important is what's happening from here going forward. If the market just ramps back up and makes new highs and keeps on going, then yeah, call me wrong. Say my analysis is flawed, whatever. You have every right to do that. But if it plays out in the way I'm saying, which nobody else out there is saying, especially with respect to interest rate cuts, I challenge you to find anyone who is telling you this with the explanation I am giving you. If it plays out this way, then that is 100% proof that you got to come to me for the insight. Because the whole entire understanding, economic understanding, and the understanding of how the monetary system functions is completely based on some crazy mythology that is just flat out wrong. And there's no self-correcting mechanism to that in terms of changing their thought process. They just keep doubling down and tripling down on the same thing. And then they tend to even ignore their past bad calls like it never really happened. And then people stop questioning and then they just listen to them again and again and again and again. So that's where I stand, folks. That's where I stand. Remember, please like and subscribe. Don't forget, go to my website, pitbulleconomics.com. Sign up. It's a free trial, 30 days. Get it. Educate yourself. The most important thing is knowledge, information. Remember, like if you saw Wall Street, the original movie, the original Wall Street, not the remake, which was so stupid, okay? I hated it. The original one, and there were a lot of great lines in there where Gordon Gekko says to Charlie Sheen's character, Bud Fox, the most valuable thing there is information. All right, that was a great line. A lot of great lines in there. I create nothing. I own. That's maybe not so great for society, but that's the way things are. That's the way the system has been, kind of constructed over the years. But when he says the most valuable thing that I know of is information, and that's what I provide. Yesterday I said my role here on this channel is to be a teacher, is to be an educator. All right, to allow you to think for yourself, to understand, to have a broad understanding. Not, okay, buy it over here, sell it over here. I know a lot of you want that. You want some kind of magical system. The best thing to have is understanding and self-control and behavior. Anyway, that's it for today, folks. See you tomorrow. Bye. Don't forget to like and subscribe. All right? Bye.